Today we're going to dive into some essential topics about mortgages that every first-time home buyer should know. Don't forget to hit the subscribe button, like, and share. If you have any questions or comments, please drop them down below. Hi everyone and welcome back to my channel. Today we have a very special guest, Camilo Mora, a mortgage broker with many years of experience.
Hi, my name is Camilo Mora. I'm a mortgage associate with TMG in Moncton, New Brunswick. I've been in the mortgage world for approximately around 9 years.
Oh, wow.
So before I joined TMG, I was with Scotiabank, where I worked at the branch level. I started doing mortgages at the branch level, and then I ended up moving into a role with the bank called HFA, where you're like a home financial advisor, and so you do mortgages with them. And yeah, that really became sort of my specialty. From there, I've now joined TMG, and I've been enjoying just having more options to offer clients.
Nice, perfect. Let's get started.
Sounds good.
We're gonna dive into 3 topics today. The first question that I would like to ask you is, can you explain the 2 different types of mortgages, insured and uninsured?
Yeah, no worries. So an insured mortgage is based around the down payment, and down payment really is what controls either type of mortgage. So when you have less than 20% of a down payment, there's an insurance you have to purchase. Now, I always like to explain to people that the insurance you purchase, you pay for it, but it doesn't actually protect you. It protects the bank or the lender.
Okay.
What that does is it gives them a guarantee that in the event that you default on payments, the insurance will actually pay them for their loss, and so therefore the deal for them, it's a little bit more secured.
Right.
So what ends up happening is when you're putting less than a 20% down payment, that insurance premium is mandatory, but when you're putting more than 20%, it's no longer needed. So sometimes when you hear of an insured and uninsurable deal, that's the difference there. Again, it's based around the down payment amount that you put down.
Okay, that was a great explanation. Now, could you tell us a little bit about what's the amortization and how it affects to the mortgage payment?
Yeah. Amortization, it's a scary term, but it's actually pretty straightforward. In very simple terms, it's the total length of your mortgage, the total time that you're committing on the actual deal. So when it's an insured deal, so again, less than 20% down payment, the maximum amortization by government standards is 25 years. When it's uninsured, you can go up to 30 years. Now, that amount you can select. So if you're dealing with a new mortgage, you can, for example, say you want a 15-year, a 20-year mortgage, you can choose, but the shorter the time is, the higher the payments are. So we as like a lender, they're looking for sort of what maximum payments can you afford. So that time will matter as it will determine the payment amount for the mortgage itself.
Okay, so are there any tips for our first-time home buyers regarding down payments?
Yeah, there's definitely a lot. If I can maybe speak to 2 or 3, really the main one is setting yourself a budget, right? It's kind of figuring out what your current cash flow looks like and figuring out an amount that you can actually put aside month to month. That will determine obviously the speed of what you can save, but it will also help you in sort of no longer count with that money. And that I find is a big piece of it,
Right.
because the moment you purchase a home, you have new expenses that most likely you're not paying now. Something like insurance, utilities, and different expenses that come with owning a property. So by not counting on that money, you're now able to put that towards the new expenses that you have, and it doesn't affect your cash flow as much as if it's a surprise expense that you're not ready for.
Right.
So definitely setting yourself a budget and having that amount would be tip 1. So tip number 2 is it's really not worrying too much about getting to 20% down payment. 20%, I mean, it's a wonderful number if you can reach it, and if you have the savings in place, because it will save you in the long term of the mortgage and just regular interest payments. But with at least a 5% down, you're able to not only get into the market sooner, but you're also able to save a little bit on interest, since the banks are providing you a bit of a discount by having the deal be insured. So you're paying a premium, but you're receiving a discount on the rate. So it helps offset that a bit. But really, it's right now with the current market, the way we've been seeing the house prices go up, you know, if you hold off a year, in that year, while you may be able to save a little bit more towards that 20%, by chances are that house would have gone up in value. So that new 20%, it's a number that in theory, you'll never catch up unless you're able to you know, save aggressively, which is not the reality for most people. So yeah, it would just be a matter of, you know, starting with the 5. If ideally you can save more, or you have more already and you can put more down, by all means, that's a huge plus. But at least the 5% would be where you would need to be to get started.
Perfect. Okay, that was really helpful. So let's wrap up. Is there anything else you would like to share with our viewers?
No, honestly, I just want to thank you again for having me here. You know, the numbers are always a scary thing. People are kind of intimidated by numbers, and you know, a lot of the times I've spoken and helped many clients who have been renting for so long that they've almost seems like the house ownership is unattainable to them. And in reality, when we look at the numbers, it's like, hey, you could easily buy a house now, right? Because they've managed to save a bit of money and their income is stable, and it's enough to cover the mortgage payment for a house that they're interested in. So a lot of times, number one would be just reach out, right? Let us have a talk. We can definitely go through numbers. And if by chance it's not the right time, then we will set up a plan to help you reach that goal, right?
That's awesome.
And that sometimes what will happen, what will come from a conversation is just setting up a plan, right? And that for me is just as good as getting a mortgage, because that means that I'm ideally helping you, you know, get on the right track.
Perfect. Awesome. Thank you so much.
Thank you again.